Hello and welcome to the CotMasterFX Weekly COT Analysis for the week ending the 8th of August 2026. Each week, CotMasterFX automatically imports the latest legacy commitment of traders and traders in financial futures reports. Market Radar then analyzes all major Forex currency pairs and crosses, identifying where institutional conviction and market imbalance is creating the highest quality trading opportunities for the coming week. Moving to the weekly analysis, all 28 major FX pairs are divided into 4 regions and reviewed individually. The analysis is then displayed in an easy-to-follow and color-coded table on your TradingView desktop. As we begin this week's market analysis, the broader FX environment remains one where selectivity is particularly important. Changing expectations around interest rates, economic growth, and global risk sentiment continue to influence financial markets, while individual currencies are responding differently across the major economies. Against this background, institutional positioning becomes particularly useful. Rather than assuming the entire market is moving in one direction, our Market Radar scans all the major currency pairs to identify where institutional pressure, participation, and trend alignment are beginning to converge. Let's now examine what Radar is seeing across the 4 regions of the global FX market. Region 1 is led by a clear short opportunity in the CAD-Yen, where institutional direction and trend structure are strongly aligned. The Aussie-CAD also stands out on the long side, with trend alignment and institutional agreement supporting the move, while the Aussie-Swiss is showing strengthening long participation as well. There are also several counter-trend signals in this region. The Aussie Yen and Swiss Yen are showing short pressure, but these moves are currently against the broader trend structure and therefore require confirmation. Overall, Region 1 contains a mixture of strong alignment and developing conditions, with the strongest opportunities appearing where institutional pressure and trend behavior are moving together. Our next region presents a generally constructive institutional picture, with the Euro-CAD currently providing the strongest long-side setup in this region. The Euro-Dollar is also building toward a long condition, with institutional participation improving from a weaker base and further confirmation now warranted. The Aussie dollar and pound dollar are showing long pressure as well, but both remain counter-trend, so the directional pressure should be treated as developing rather than confirmed. The pound Aussie and pound CAD are weaker setups, with either limited agreement or early signs of institutional interest that still require follow-through. Overall, Region 2 is leaning toward long participation, but the quality of that opportunity varies considerably between the pairs. Region 3 is dominated by the pound-yen, which remains the strongest short opportunity identified in this region, with institutional direction and trend structure aligned. The Euro-Swiss is developing a long condition, while the Euro-Kiwi is also improving on the long side, although institutional agreement remains incomplete. The Euro-Yen is showing short pressure against the prevailing trend, making this a counter-trend condition that requires confirmation before it can be considered a stronger opportunity. The pound Swiss is also showing long interest, but institutional support is not yet sufficiently clear. Overall, Region 3 contains a strong short theme alongside several developing long opportunities, making confirmation particularly important before considering participation. Our final region is showing a developing long theme, led by the Kiwi Swiss, where institutional interest is building and agreement is improving. The Kiwi CAD and Dollar Swiss are also developing long conditions, although both require further institutional follow-through before confidence increases. The Kiwi Yen and Dollar Yen are showing short pressure, but these moves remain counter-trend and therefore carry additional risk until the broader structure confirms the change. The Kiwi dollar is also showing counter-trend long pressure, but trend alignment is currently unsupportive. Overall, Region 4 is developing rather than fully confirmed, with the long side showing the most interesting emerging conditions while several counter-trend signals remain on the radar. So, stepping back from the individual regions, what does this week's radar scan tell us about the broader institutional market? The picture is selective rather than uniform. We are seeing several areas where institutional direction and trend structure are beginning to align, while other markets remain developmental, counter-trend, or insufficiently supported by institutional agreement. The strongest opportunities are not simply the pairs showing a directional bias, but those where positioning, participation, and trend behavior are beginning to tell the same story. At the same time, the counter-trend and less aligned markets highlighted during this review deserve caution rather than forced participation. The broader message this week is simple: be selective, follow the institutional evidence, and investigate the strongest conditions before considering a trade. Market Radar identifies where institutional opportunity may exist, highlighting the currency pairs demonstrating the strongest institutional participation, conviction, and directional agreement. It provides the executive market overview that guides traders toward the opportunities most deserving of attention. Each of the CotMasterFX suites then explain why those opportunities are developing, providing the institutional context behind each market so traders can better understand the forces driving price movement before applying their own trading methodology. Together, they form a complete institutional analysis workflow, bringing greater clarity to institutional positioning and helping traders understand the forces behind potential market opportunities before applying their own trading methodology. To learn more about the CotMasterFX institutional analysis systems, including the legacy, financial, hybrid, next-gen, and market radar suites, visit CotMasterFX.com. In closing, it's important to remember that institutions cannot predict the future and are sometimes wrong in their positioning bias. However, as market makers, they are without doubt among the most skilled and resourced traders in the financial markets, and their positioning provides the primary liquidity that drives trends. Uncovering what they do and when allows retail traders the best opportunity to follow smart money rather than simply becoming their liquidity. Experience will demonstrate that successful trading is not about achieving a perfect win rate. Financial markets will always involve uncertainty, and no methodology can eliminate risk. Our objective at CotMasterFX is simply to improve the quality of every trading decision you take by understanding institutional positioning and aligning ourselves with the broader forces influencing market direction. Thank you for joining us for this week's CotMasterFX Institutional Market Briefing. We hope you have gained some valuable insight into the importance of understanding institutional trading behavior and applying it to your own trading. We look forward to welcoming you again next week as we continue decoding institutional positioning across the global Forex markets. Until next week, thank you for watching and trade well.